Okay, everybody, thank you for joining us. And as I alluded to earlier, we are recording because we understand from a few people that they could not make the today's webinar, but that they are very interested. We're joined today by Damon Neves, Managing Director of newly listed Energy Explorer Finder Energy. The company is extremely exciting to us for a couple of reasons. Number one, I was talking to Damon just before about we do like the energy thematic about pricing. A lot of pricing power out there, but specifically, in the case of, narrowing it down to Finder, the company is out there actively spudding and making acquisitions. They finalized one today, in fact. So we like the fact that there is a activity happening, which, and obviously the only way to create true shareholder value is to get out there. So with that introduction, everybody, welcome Damon. And Damon, maybe a great place to start with is just a little bit about your background, because people always invest in people as much as they do the projects.
Yeah, thank you, and good morning, everyone. Look, my background is oil and gas. I'm actually a corporate lawyer by trade, but I've worked in the oil industry for the past 20 years and been involved in projects through the whole spectrum of E&P activity. So from exploration through discovery, development, oil, gas and condensate development and production projects. And so I joined Finder 4 years ago. And the team at Finder, I do want to talk about, because the Finder team have built a very strong technical reputation in the market. So what I bring is the commercial and deal-breaking capabilities that's now matched up with an extraordinary technical team. Together, the team's done over 25 farm-out transactions. We're talking of hundreds of millions in deal value. Finder is a unique company, and looking forward to talking to you today a bit more about what we do and how we go about it.
Right. Hey, and maybe just starting there about, the farm-out strategy. Can you just tell us a little bit about how Finder operates and that farm-out strategy?
Yeah, sure. So this is a model that's I think pretty well established in the industry, but Finder does it on a scale that is kind of unique to us. So when we talk about farm outs, what we're talking about is trading down our equity in projects in return for funding from the industry to drill wells. So basically, the model on all of our projects is we go in, we take high equity. So we get in early, we get in cheap, and then we do the early stage technical work. So that's usually seismic acquisition, interpretation, and then we get prospects ready to drill. Then we go out to the industry, and typically we'll deal with majors and large independents, so multi-billion-dollar companies. And these are companies with the balance sheet to fund drilling and take exploration risk. And so we've transacted, as I said, over 25 deals with the industry, and that's a record that I think no one else even comes close to. So that's our model. It relies on industry funding more so than funding from equity markets or our shareholders, and it's a model that's proven very successful for us through drilling and discoveries.
Yeah, and Damon, does that also hold testament to just the experience of the team that you're able to find these transactions, to be able to, to talk to the, the majors of the world and not sound silly, so to speak?
It does. Look, I guess that the deals we've done sort of validate the credentials of the team. And as I mentioned, the team has a very strong reputation in the industry, and that brings a lot of respect for the technical work we do, and that helps facilitate transactions. But the other part of the equation, and it's a really important part for people to understand, I think, is we maintain huge data libraries of modern 3D seismic, and we apply the latest technologies. And these data libraries are expensive. So our Northwest Shelf database alone is hundreds of square kilometres of 3D data. Now, if you're going to go out and acquire that today, you're talking over $100 million of cost to buy that data. And we have a similar data library in the North Sea. So although we're a junior, the kind of regional data we maintain is almost like a major. And it's important not just because it allows us to do deals with majors, but it allows us to compete with those companies for the best of the acreage. So we're not a small company that just has an interest in one area. You know, we've got 10 projects, or this morning you mentioned a new project, so 11 today.
Right.
We take a diversified and a regional view, and that's actually been the formula for success for us. We have a 60% strike rate on exploration drilling, which is a very high success rate, something we're very proud of.
So Damien, something that I always look at when investing is the upcoming news flow, and that there's a lot of catalysts coming up for, I guess, share price appreciation and getting the market interested. Do you want to just give us a timeline of what we can expect to see in the next 6 to 9 months?
Yeah, sure. Look, I might share my screen.
Yeah, go for it. You should be enabled now.
Yeah, sure. Give me one moment.
Yes, everybody. I think that everybody can see. Certainly we can.
Yeah, so this is this timeline here shows our key activities. Look, the big one is our Kanga well. So the rig's actually weighing anchors on Thursday. We'll take handover of the rig close to the drilling location on Sunday, and we'll be spudding the well next week. And that's the 30-day well, and we'll have results sometime in June. Now, Kanga, I think, is an important catalyst for the company. The P50 or 2U resource case for Kanga is 170 million barrels gross. So this is a big oil well. Kanga is located in the heart of the northern Carnarvon Basin. It's a very oily patch. It's surrounded by oil fields like Mutiny or Exeter. And it's an area we know well, and importantly, an area where we've had success. So we've made a number of discoveries in this area in the past. So this is a big catalyst for us. For Finder, it's net 25 million barrels on that mid case I mentioned, which, if you think about it, in terms of Dorado, it's a similar size field. Carnarvon, who you know is a 20% partner in Dorado, their market cap's 500 million. So Kanga is a Dorado-like event, I guess, for us, but the key difference is we have only 150 million shares on issue. So in Finder, this offers 10 times the share price leverage that, say, Carnarvon would have in Dorado. So this is a massive event. It's an exciting event to have so soon after listing. And with a market cap of around 30 million, this is an extraordinary opportunity. Your first question asked about our farm out model.
Yes.
This is a great example. This is a $35 million US well, and Finder's exposure is capped at less than $1 million US. So it shows you how that strategy works to de-risk our position exploration, but still give us leverage to success.
And to be clear, this is a company maker potential.
Oh, look, it's huge. It really is an extraordinary event, and coupled with oil prices over $100 a barrel, we're talking a re-rating of the company in the success case. There's risk here. We're around discovered oil.
Sure.
The technical work looks good. It's got a 36% what we call POS, or probability of success.
Right. Great. And, maybe just going through some of the other catalysts, but, well, I don't know whether you want to do it on a catalyst basis or on a project basis, really up to you, whichever way you want to take it.
Yeah, look, I don't think we need to go through project by project. I'll probably touch on some of the more key projects, but you can see there the model at work.
Right.
So basically, you can see on the assets in the early stage, we're reprocessing or acquiring data, and then that feeds into a farm out process. So beyond Kanga in our WA412P block, basically every other block we own is now covered by 3D data. So we've done all that legwork. Some of the blocks we're reprocessing that data, but all of them we take to market over the next, say, 6 to 12, 18 months. So, the importance of that is beyond Kanga. As we do deals on these other blocks, you'll start to see other wells come onto the schedule. And that's something that is a proven model for Finder. We've done it sort of year on year for the last 17 years. You know, we're
Right.
not, we've been around a long time. And, you know, what I will say about Finder today, I think our portfolio has never looked so good. You know, we're really happy with this unfolding in the UK.
Right.
You know, a big turnaround in the industry there. They're, as you know, they're desperate for oil production, and the industry is answering their call. And in Australia, we're in that Dorado trend. You can see our 547P block there. And I just want to take you to that project, because
That would be great.
this is a map that shows our interest just west of Dorado in that play. And you can see, if you can see my cursor, the Dorado play is delineated in this orange here. This is the Dorado discovery here. And look, this is the hottest property in Australia right now in oil and gas terms. So Dorado is the biggest discovery that's been made in the Northwest Shelf in the last 30 years. 2 weeks ago, Santos drilled another well, Pavo, discovered another 40 million barrels there. That's got an extension of that field, so likely 80 million barrels. And what we're seeing here is a new play unfolding that is, you know, world-class. So we've had now 10 of the 11 wells drilled in this play have all found hydrocarbons. And in the white here, this is Finder's position. This is our 547P block that we own 100%. And you can see we've got a string of prospects here in the blue. These are all 100 million barrel plus prospects. So it's a big oil play. We're seeing that oil's prolific here. So Finder bid for this block in a government bid round. It was the most competitively bid block in the bid round. We beat groups like Santos to get the acreage. And, you know, again, as a junior, you know, it's Finder's technical capability that allows us to compete and often successfully, as we were here, for the best acreage. So this is one we're really confident of farming out. You can see in the top right here, this is our Fafa prospect. I'll just move the screen around. So this is our Fafa prospect. You can see the similarities with Dorado shown on the bottom left. So we've got a shale incision here, similar to Fafa, and we see the amplitudes through the reservoir sections, same as Fafa. The other thing that Carnarvon talks about is these what they call FEF, or fluid escape features, that are prevalent on the seismic, and these have been shown on the seismic above each of the discoveries to date. Here's one here over Dorado, and a similar one here over our Breeze prospects. And so again, this is one strong indicator of the presence of hydrocarbons in these reservoirs. And so that lets us know that there's a good chance that our reservoir here in Breeze is hydrocarbon bearing.
Right.
And so that's something now that Santos and Carnarvon have learned through the exploration they've undertaken.
Right. And Damon, you know, if you won't go back again, you know, one of the things that investors like about, you know, Finder is you have tons of catalysts coming up over, call it, the next 12 months. This is just one of them, albeit, you know, arguably the biggest. Did you know, you recently IPO'd. Was one of the thoughts behind it was the fact that you were going to have so much activity, call it, over the next 12 months?
Look, that was certainly a factor. I'll say the big consideration for us is, you know, Finder, as I mentioned, we've had discoveries in the past, and in fact, we were the original operator of the Dorado and the surrounding blocks that Santos operate now. And we divested after we had a string of discoveries in that play. We divested to Apache, who later became Quadrant, and then sold those assets to Santos for over $2 billion.
Right.
The scale of success there was just too big for us as a private company to stay in and appraise and develop. So our thinking behind going public through the IPO is to have access to public equity. So now to drill Kanga, if we have success there, we can stay in the game and become a genuine sort of producer and developer.
Right.
Very important to us. That's our aspiration.
Got it. And I guess, now maybe if you could just turn towards I'm just conscious of time, towards the North Sea. For investors that don't know, North Sea, incredibly prolific area of energy exploration and production over, call it like the last couple of decades, but also just as importantly, prices of European energy can certainly be a lot higher even than here, just due to infrastructure and local issues. But maybe just take it over to your North Sea portfolio now.
Yeah, look, we've timed our entry into the North Sea perfectly. So we've picked up
Well done. Yeah.
what is a very large position in the North Sea. And importantly, I guess like the Northwest Shelf, we're targeting the big oil. So you can see, this is our acreage in the white. You can see around us is the Buzzard field. And in fact, it's not shown on the map, but this block here is the block we announced this morning. We've acquired 100% of that block adjacent to Buzzard.
That's 2527?
2527, correct.
Okay.
Yeah. And Buzzard's a 1 billion barrel field. And it's that Buzzard play that we're chasing here in 2528. Here is the Forties field. Again, that's the biggest producer in the North Sea for the UK, over 2 billion barrels. And again, we're chasing that play. So again, although we're a junior company, we're right in the mix of the giant historic UK oil fields. And I guess our ability has been to be able to identify these opportunities in the downturn, so that we're ready to transact now that we're seeing a recovery in the sector and a recovery in industry activity. So look, we've positioned ourselves around infrastructure here. It's an open access infrastructure environment. So we're talking to operators of nearby infrastructure about the prospects we've mapped up in our blocks, with the potential to tie back. And the significance of that is these are cheap, fast opportunities to get production into market. And that's what the UK is so desperately looking for now with oil sanctions and gas sanctions on Russia. They need UK production. And the government's gone to industry and told us to produce more barrels. And so this is the perfect time for us to hit the market with these opportunities to find industry partners to fund our drilling.
Yeah, and Damon, can you just, as far as like a timeline from in the North Sea, if you were to find something hypothetically tomorrow, how fast could you bring it to production? Just in ballpark numbers.
Yeah, look, it's from discovery to tieback and production. It's kind of within a 2-year time frame.
Right.
But look, these assets are very, I would say, fungible, very transactable. So from the point of discovery, you create a lot of value, both value, I think, that's recognized in equity markets, in our stock price, but also the industry. All of the operators of these facilities have spare capacity. They want the barrels, they're prepared to pay for it, and there's opportunities to divest for us. And so there's early opportunities to realize value immediately.
Right. Okay. And what would be upcoming, like, the catalyst in the North Sea that we should be looking out for over the next 6 to 12 months?
Yeah, so these blocks, we're currently reprocessing our 3D seismic data. So we've licensed a swath of data over this region. But we're already talking to groups about farming out. So what you'll see this year over the next 6 months is a sort of string of resource announcements as our technical work comes to a close, and we take that new data into the market to find partners, and then you'll see the transactions, and that'll put these deals will put wells on the agenda. They'll give our shareholders visibility on the timing of the next wells. So, that's coming. It's coming on all of these blocks. We really hit the ground running in the UK.
And are the people it's fair to say you're speaking with are, active players in the region already?
Yeah, so we've done some early deals. You can see here on our 2524 block, we've partnered with Harbour early on. So Harbour are the biggest oil producer in the North Sea, 200,000 barrels a day in the UK North Sea. And you might be in your your clients might be familiar with Harbour. They actually bid for Santos a couple of years ago. So this is a multi-billion-dollar group.
Right.
They're our partner. We operate, so that's the sort of caliber of the groups we're talking to. So I guess the point of distinction with the North Sea from the Northwest Shelf in Australia is there's just many more operators, many more groups. That makes our market much bigger, and there's just prolific infrastructure. So it's a great environment with oil at $100 a barrel plus. It's a great environment for us to go and do deals.
Got it.
Damien, how long do you think the cash from the IPO will last?
So look, we for our use of funds, we raised and forecast out 2 years. Look, all of that, what I say, 75% of the funds raised, we actually put into the ground. So we run light in terms of corporate costs. It's a small team, but because we operate, we have our partners subsidised our overheads, our corporate costs, and that helps sort of manage our burn rate significantly. So look, whilst we raised for 2 years, that doesn't account for any transactions. So if we're successful in farming out, we'll recover cash in those deals, as we have done historically. And that obviously keeps the lights on for many years to come. So look, it all depends on how well we do with those farm out transactions, but certainly we've raised money to see us through to the end of calendar year 2023.
Right. Obviously, in the next couple of months, if we have some big success in the Northwest, obviously that could be a company maker and change the dynamics massively, I'm sure.
Yeah, of course. Yeah.
All right. So if anyone wants to ask a question, please do so. I've unmuted Nick and Jason, so if you guys want to say anything, go for it. But otherwise, guys, please ask questions, let us know. You can type in the chat if you don't want to speak.
Or just WhatsApp. I've already got one on WhatsApp here. Let's give everyone here an opportunity first on the mic. Jason, if you want to ask any questions, or Nick. Okay, maybe I'll just kick it off. The person's asking, are in the North Sea, is there any seasonality when you can't conduct activities? I don't know if you can hear me.
Yeah, look, it's an interesting question. Sorry, can you hear me?
Yeah, sure.
Yeah, look, it's a very good question. Look, it's a very different operating environment in the North Sea. In the North Sea, we have, vessels acquiring seismic, rigs moving all the time, and we don't have the same EP approvals process. I mean, to get an EP, even just to shoot seismic in Australia, it's a 9-month process. Whereas in the UK, it's done within a matter of weeks. So it's a much more active region. It's much more progressive in terms of its support for industry. And we like that about the North Sea. We like that there's no red tape and we can go out and get after it, because really at the end of the day, that's what Finder's all about. We're an active company, we're an active management team. And part of our advantage is our ability to move our projects forward quickly.
Right. Another question I'm getting is, you said that you created a large library of seismic data. Is that in itself an asset that's sellable?
Oh, look, the answers are complex. It is in part. So the way seismic licensing generally works is it's called a multi-client data license, and that is if anyone buys us or wants to farm in to our projects, they pay the data owner for the data. So some of our data we own, but most of it is multi-client data. So there's fees that go to the original data acquirer, which are seismic companies like CGG, PGS, that have global data libraries. But we're and Schlumberger, others, but we're one of the multi-client data providers' best customers, because we bring a lot of groups through our farm out transactions into our joint ventures, and that creates sales revenue for these groups. And what that means for us is the data owners are prepared to do very attractive deals for us to own their data. So we generally pay under the odds to acquire this data, and that's how we've managed to amass such an impressive data library.
Got it. Another question someone's asked me is, you said you're spudding next week. How will we know if you have success? I don't know how you would answer that so quickly, but I'm just giving it to you.
Yeah, sure. So it's a 30-day well.
Okay.
So we don't get into the reservoir until 20-25 days. So we'll be giving weekly progress announcements as we progress down to TD.
Right.
So look, what you'll see is once we get into the target reservoir, as soon as we're in a position to do so, we'll announce well results. But that'll be sometime in June.
Right.
So keep in mind, the top hole section isn't reservoir hydrocarbon, or not prognosed to be hydrocarbon bearing. So it's only towards the end of that 30-day program that we'll be in a position to announce results.
Right. But I take it as a given that certainly the market will be informed at that point in time.
Yeah, absolutely. Yeah.
It's Jason here. I thought I'll just jump in and just say that currently, because spudding's next week, we're road showing Finder in Melbourne and Sydney this week. This is the first few of 30-odd meetings that we're doing. And the beauty of where it's trading is at the moment, it's not too much. You're not getting in too late with the low 20s. So we should see a lot of action this week and for the coming weeks as well in Finder.
Yeah, absolutely. And Jason, I'm sure you'll keep everybody abreast as well. Okay, I don't see any more questions in the chats, but I'm sure anybody, if you want to just send to Jason, Nick, Sean, or myself, or whomever, I'm sure that Damon would certainly answer any of those questions for those of you that are shy or anything that you think of after the fact. Otherwise, thank you. We know it's the middle of the day on as I said, the first day back from a long weekend. And Damon, really appreciate your time. Jason, Nick, thank you very much as well. And we certainly look forward to watching.
Yeah, thank you. And equally, thank you for your support and your clients. This really is an exciting time for us, and we're happy to have them on board with us.
Thanks, Damon.
Pleasure. Thank you.
Bye-bye.
Thank you, guys.